Hello, I'm Bernard Hickey from interest.co.nz and welcome to the Roost Home Loan Affordability Report for January. Now this is a series of reports that we produce monthly, sponsored by Roost Mortgage Brokers, where we look at how much it costs of your after-tax pay to afford a mortgage on the typical home. And we look at various regions and how that's changed over time. And we also look at various scenarios, whether it's a single income or whether you've got two incomes. It's a household situation. Now you can have a quick look through at the various scenarios and the various regions in the table beneath this video. And I'm just going to quickly go there now to give you a general idea. You can see that for New Zealand overall, for a single median income, you need to put aside 51.9% of your after-tax pay to afford an 80% home loan on a medium-priced house. And all through the nation, you've seen a slight improvement in that affordability because interest rates remain at record lows and you've seen median house prices unchanged in January from December, according to the Real Estate Institute of New Zealand. Let's look briefly now through the rest of the country. You can see slight deterioration in Northland and in Whangarei due to an increase in median house prices. Interestingly, in Auckland itself, in central Auckland, in January there was a slight improvement because of a fall in median house prices. But as you go down the nation, you can see pretty much flat, some improvements, some deteriorations, again, mostly because of the move in house prices. And that's the typical home loan affordability reports. You can also see here, and you're able to click through to the individual regional reports, which looks at what's happening with incomes in your region, plus house prices. And of course, with interest rates at record lows, we're seeing some significant improvements in affordability from that worst period around about the peak of the housing boom when house prices were quite high and also interest rates, particularly floating mortgage rates and some fixed rates, were over 10%, obviously now closer to 6%, in fact for many under 6%. And when you have a look at our interactive chart, which is also quite useful, looking at the nation, you can see over time that affordability was at its worst. Remember, when that chart is at its highest point, that's the worst point. And it's improved significantly through the last couple of years, mostly because of the fall in interest rates. In some areas there have been falls in house prices, although house prices in Auckland, for example, remain at or near their record high levels. Just looking too at other measures of affordability, particularly household affordability, because most people would say you need two incomes to afford a house in New Zealand, particularly in the big cities, Auckland, Wellington, Christchurch, Hamilton, Tauranga. Although there are some big cities, for example, Dunedin, where house prices are much cheaper. Now, when you look at household affordability, it's a much better position, particularly for young households who are buying cheaper houses. And you can see that household affordability is for young couples at around about 20% of after-tax income, 21% in January, which is at the best levels in 7 years. And Roost Mortgage Brokers are saying that many first home buyers are withdrawing their money from KiwiSaver and using the subsidy that's there to put down a deposit on the house. And many banks are competing with each other to lend 95%. So if you can come up with a 5% deposit, in many areas you can afford to buy a house at the moment with interest rates at their record lows. So there we have it, the Roost Home Loan Affordability Report for January. And remember, underneath this video you can link through to your particular region and play around with those interactive charts. I'm Bernard Hickey for interest.co.nz with the Roost Home Loan Affordability Report for January.